Let's get more on what's moving this market here in Australia and why. And for that, Chris Conway joins us from the Australian Stock Report live from Melbourne. Welcome to the program. Great to see you there, Chris. What have you got your eye trained on today? I mean, you just can't get past the fact that the local market is above 6,200.
Good afternoon, Nadine. Yeah, look, I think you put it quite eloquently in the lead in there. You know, we have really decoupled from what's going on more broadly in global markets and even here in Southeast Asia. Our market has remained quite resilient, which is very nice to see, of course, in the face of a slowdown in China, yuan weakness, obviously increasing trade tensions, I should say, and a host of other factors. So, yeah, it is wonderful to see our market, as I said, providing some resilience, and it really is the opposite side of the coin of that period where we saw, you know, US markets really going up for a period of years where our market essentially did nothing. So we're getting a small taste of the other side of it. I don't know how sustainable it is, but as I said, it is nice to see.
Yeah, well, that was my question. How sustainable is it? Because when we were outperforming, you know, a week and a half ago, and the run had been going on for quite some time, there were plenty of analysts out there saying, look, we could just as easily catch up to the downside quite quickly. So is that what you're is that what you're bracing for? Is that how you view the likely scenario in the days perhaps to come?
I don't know that it's a foregone conclusion that we have to roll over. But what I would say, again, just putting my trading hat on, is that I'm cautiously bullish. So one of my mantras is always to remind myself to trade what I see and not what I think. And of course, what I think is probably what everyone else thinks, that, you know, a trade war is bad and the slowdown in China is obviously particularly bad for Australia. But what I'm seeing is a market that's going higher. So again, I have the good fortune of not having to commit to positions and hold them for 12 months. And in that vein, as I said, right now I'm just trading what I see. But yeah, absolutely, there's definitely part of me in the back of my mind where I'm saying that any one of these factors that I've mentioned, because they are, you know, obviously big global macro factors, could scuttle our market. So yeah, I'm sort of being pulled in two different directions, but the bottom line, as I said, Nadine, for me is just to trade what I see. And right now, as I said, the market, at the very least, the bulls want to defend 6,200. And look almost prepared to take another run at sort of that 62.50 high that we hit a couple of weeks ago.
Yeah, I mean, and worthwhile pointing out that we've got, you know, the energy space moving higher, the financials, the big four banks moving higher, the REITs are moving higher, even names like Telstra up by 1.7% today. Qantas, even though we've got, you know, oil prices lifting, Qantas is soaring up by 2%. I know Qantas has been one of your picks in recent times, Chris. Let's give credit where credit is due as well. A2 Milk, you had a buy on that company sort of toward the end of June. We've experienced a bit of volatility in the share price as of late, but today, you know, doing really well after an extension of that Synlait supply pact. So, yeah, how much further can A2 run?
That's the million-dollar question. Again, just putting my trading hat on, I'm happy to ride it until it bumps me off. But yeah, look, I think today's agreement that you pointed to really points to that ongoing demand from China, and that's, you know, a huge part of the A2 story, and analysts have at various periods championed it and at also other times questioned it. But I think one can draw the conclusion that, of course, they wouldn't be looking to extend this production agreement with Synlait to increase more volume if there wasn't the subsequent demand for it in China. We also like the opportunity, this was one of the reasons why we recommended it towards the end of last month, was that we like the opportunity in America as well. They are trying to grow their footprint in America, and that was one of the reasons why we saw not too long ago, you know, an increase in their marketing costs. Is they are trying to push very hard into some new spaces and further into China, and it's costing them more money to do that. So yeah, when I see opportunities like that of the stock falling, you know, 10-15% on the back of some increased marketing costs, I'm really looking at it as an opportunity rather than a sign that things are starting to be derailed. And again, as I said, that agreement today with Synlait is a positive sign, I would have thought.
Yeah, great. Well, it's having a good day today, and some of that afterglow or the ripple effect being felt by some of the other names that we often associate with that space, the Blackmores of the world, etc. Beach Energy, there's another one you've been liking, having a great session today, got upgraded just to neutral though at JP Morgan on the back of recent resource upgrades. So again, how do you view Beach when it's up today more than 5%? Tempting to take some money off the table?
No, not really. I must say I sort of lucked into this one a little bit. As you would know, Dean, I've been an oil bull for quite some time, since it was about 50, 55, and I still think we hit 80 for WTI at some point in the back half of this year. So wanted some exposure to the oil space. This was the one that, you know, on the metrics that I like to look at, we have a screen that we've built at Australian Stock Report for momentum, quality and value. And this was the one that came up trumps out of course, the other oil names like Woodside, Santos, Oil Search. So yeah, lucked into it last week. It has caught an upgrade. Their reserves to production ratio on the back of that upgrade has gone out to 11 years. Just to compare, most of the others are sort of 14 to 18 years. So still a bit low. They're still going to need to spend some money on capex, but it was a nice production upgrade. And as you say, JP Morgan today upgraded to neutral with a price target of 180. Obviously, we're a little bit more bullish than that. I would be looking at a price maybe a little bit north of $2.
All right. Well, that's pretty positive on the stock. Chris, great to have you on. Thank you as always.
Thanks, Nadine. Cheers.
Chris Conway, Australian Stock Report.